What's good, traders? Welcome to another day in the bootcamp. If you're new to the channel, make sure you like and subscribe. If you'd like to join my community, make sure you click the link in the description below. Today, guys, we are going to be looking at how you can do your weekly analysis, because you don't want to start off your week not knowing what the market is doing, and you don't want to trade not knowing where potentially the market can be going. And so we're going to break down the market today, guys, and I want to really show you guys how I break down the market on a weekly basis, so that then I know exactly what is my area of interest, where could potential targets be, and also it's easier to find out what the next candlestick is on a weekly time frame or the daily time frame or the 4-hour time frame than trying to find out 20-15 minute candlesticks and figuring out when the next area of interest is. Now, if that seems all confusing to you guys, hopefully by the end of this video you will know how to analyze your charts like a professional, like a professional, successful trader, profitable trader. And hopefully you guys will be able to understand your weekly bias, your daily bias, your 4-hour bias, and then always be on the right side of the market. Now, we don't just analyze the market because we want to place trade. We analyze the market to understand what is actually going on in the markets. If you just analyze markets to place trades, you're going to realize that you are going to have a load of losses, and it's not good to have a load of losses, guys. So let's go right into the market and let's actually have a look at USD JPY. So usually we have like a bunch. I normally have like a piece of paper or something, and what I like to do on a Sunday or Monday, usually I do it on Mondays now because I don't actually trade on Mondays, but usually I'll do, if you are trading on Mondays, I'll do it on a Sunday just before the market opens, because the market is shut. You can really take your time and analyze the markets. But what I would do is I would have a list of charts. Now, if you're a beginner, I would have only like one chart up. But if you are a little bit more confident with your analysis and you know that you can analyze charts, I usually have like a bunch. But let's just say, for example purposes, we only had USD JPY. Like, let's just say this has been a profitable chart market for us, and we know this market from the start of our trading journey, which was, let's say, 4 years ago, right? So we want to now analyze. Now, the thing about analyzing the markets, guys, you always want to start off fresh. So you don't want to have yesterday's or last week's zones up there. You want to like always remove your drawings, restart, because the more drawings you have, the more is going to get confusing, and you don't want to get confused in the markets. You want to make sure that you are up on track with the markets, and you don't want to add on analysis to something that's already has a lot of analysis. So I have like a to-do list that I like to do. So usually when I have a pair, the first thing I'll do is find the, let's actually put this, so analysis checklist. Let's call it analysis checklist, guys. Yeah, analysis checklist. So the first thing first I like to do is find the market would like to trade. So that's what we've done, and I just don't know how to type today. That's what we've done, right? First thing first is find the market that I would like to trade. Okay, so in this case it is USD JPY. So we've done that. Okay, next what we want to do is find the trend or bias. Okay, trend or bias. If anyone says I want to find the daily trend or the weekly trend, they're basically saying they're finding the bias. Is it bullish? Is it bearish? Okay, so in the market, we're always gonna have bullish traders versus bearish traders. Like, we're always gonna clash. You're never gonna see a bullish trader saying, you know what, today I'm going to sell. Like, you're never gonna see that. A bullish trader is always gonna be bullish, and a bearish trader is always going to be bearish. However, because we're day traders, we don't actually have to pick and choose. We can actually just be like, today I'm going to be bearish, or today I'm going to be bullish. So bear in mind, guys, we are on the weekly time frame. So technically we don't need to see all of these candlesticks. All we need to see is really what's happened in the last few weeks. So this candlestick, this candlestick, this candlestick, like literally this, right? And what I like to do is I like to see, okay, in the past few weeks, what was the lowest point in the market? So I would just get this tool, it's called the horizontal line or ray, and I'll put areas of the lows. So that was a low, that was a low of last week, and this is a low of this week. Okay. So you can see on this, during this week, we created low and highs. The highs got swept, the lows never got swept. So this is the lowest point in the market at the moment. Okay. Then the last week we had the low and the high. The high has been swept already for this week, but the low hasn't. So most likely we're looking at the market being bullish. That's our bias, most likely. Okay. Why? Because the lows are not getting swept. It's only the highs that are getting swept. So our bias for the weekly time frame would be bullish. Now, I really do like to keep these lows in check because these could be potential buying spots. Okay, potential, remember, potential, guys, is not always going to be a buying spot. It's just potential. So then what I like to do is, and I literally, guys, I only spend a few seconds on the weekly time frame because I'm a day trader. I don't want to spend so much time analyzing data on a weekly time frame when technically I don't even need to look at it. I just want to know what could potentially be the next candlestick. So if this was a strong bullish candlestick, right? Bullish engulfing, bullish Maribozu, whatever you want to call it, I most likely know that the next one's going to be bullish too. Okay. And so I can also put some target areas at these highs because if this high got swept, this high has been swept, most likely this high, and this high will get swept. And you can actually just draw it out. Literally have a line there, a line there, a line here, right? And these could be literally your targets. But I like to keep it there, but then I always like to clean up my charts as well. It's not always going to be like this. I like to clean up. So we go on the daily to really see what's going on. Because even though we're day traders, the daily time frame is one of our best friends. And you can see that our daily low is here, and it's the start of the week. It's a Monday today. And you can see the daily low has been created, and now we are trying to root for the high, which is here, right? Last week's high. Remember, the weekly time frame, that was last week's high. So right now we're aiming for last week's high. So right now, I would not have these lows. These lows are very much, you know, they are not going to get swept anytime soon. Because we're bullish, I'm just going to keep this daily low, this last week's high, this is the following week's high, and this is obviously the following week's high as well. Okay, so now we're starting to build some sort of targets and so forth. But bearing in mind, guys, we are still looking at the market and analyzing on a plain chart. We haven't actually looked at the numbers, looking at price or anything. We're just looking at market structure at the moment. We're going to go in depth with price action and key levels and all that in a second, but we're still trying to just build a storyline. What's actually occurring in the markets? We want to build a rapport so that then when we do buy, we have back data to tell us that this is why we're buying. So if I just go and if we go back on the weekly, I think I have this here. Let's just anchor it so it's always at the top right here. So we have a checklist. Okay, so now we found the trend and bias. We know that we're most likely going to be, we're bullish, and we're most likely going to sweep one of these highs. That's what's most likely going to happen. Next, what we want to do is add key levels. Okay, now we technically already have key levels, right? This here, this here, this here, this here. However, that's not strong enough. As you can see, this high was 154.746. This high was here 155.934. This high right here was 156.770. Like, they're not memorable numbers, they're not round numbers, so they're not really numbers that you like to see. So I've got my bias. I usually do the daily and weekly as my bias. So daily and weekly, like if I just have, we got the 15 minutes. Okay. we have the 1 hour, 2 hour. Let me put a space between here. 1 hour, 2 hour, 4 hour, and then the daily and then the weekly. Okay. So with this is how I like to do it. I like to break the daily and the weekly is trend bias. The 4 hour to 2 hour is key levels, and the 1 hour is finding area of interest, and then the 15 minutes is entries. Okay, this is how we break down our chart. And you got to remember this, guys. If you have to write it down, draw it, put it in a pen and paper, make sure you write this down, because this is exactly how I do my analysis on a weekly basis to make sure I am always on check with the markets and I'm not always unknown. I'm not the unknown in the markets anymore. I know exactly what's going to happen next every single time. Even if I'm not trading, I will do it. Okay, make sure you understand that. So we go on to the 4 hours. We want to start adding some key levels. Well, instantly I can see that a key level here could be around, let's go for the round psychological number, which is 155. 155. And what I like to do is I like to put as many key levels as possible, and then deleting the ones that I don't need. So for example, 155 is very close to this liquidity area, so I'll delete this liquidity area. Okay, next 155. Well, we already know that 150 would be below that. Boom, like this. Now 150, it's been respected, like you can see is respected, but it's kind of like it's like a very liquidity area, like it's very liquidated, you know. It's very much like, okay, goes up, goes down, goes up and down, and it does that, right? So it's not the strongest, but we'll keep it there. Let's go for 152.500. Let's go for there. Let's see what's there. Okay, another, not really the best, so I don't think that's a key level. Let's go for 151. Let's see if that's a nice key level. Okay, that's now talking. So instead of 150, I'm going to keep 151. That looks like a nice key level. Why? Because price broke, retested once, then did a liquidity sweep at that level, and then it's continued to go up. So that's a level that I'm interested in. So 151, let's see 153. So it looks like we're kind of going in odd numbers, because obviously 150 was not good. Looks like we're going on odd numbers. Yeah, 153 looks good. You know, we've got some respect here, some almost respect here. Kind of like this. If I draw a zone, I think it'll be kind of respected within this area. Like here. You guys see that? So we have, so cool. We have one level here. One level here, and I'm saying this level right here, and usually I like to have around 3 key levels. Why do I have 3? Is because anything more than 3 I think is doing too much. Obviously we have these liquidity areas right here, which I'm going to keep, but we're going to just clear everything up now, so we don't need this. And we now have the key levels, we have zones around them. I've taken away, let's say we do have every single key level. I'll tell you why we've taken away. It's got key level here and then 4, right? And this is very important, guys, because you don't want to have key levels always drawn, like all of them, because look, you can see 154 is not really super respective, right? It's kind of respected here, then we broke, then we came down, then we kind of respected here again. Like it's kind of, but it's not the best. We could actually keep it, and I think for this example I probably would keep it. Actually, it does look pretty good. So look, key example, we're not always going to be correct, but sometimes you might actually notice something if you just draw it all out. And so we got 154, we got 153, which 153 looks really good. But is it major? Yes, I would say it's definitely major. 152, I just don't feel like, yes, it is there. It is there. Like we got here, was support over here, was resistance over here. Great level of support around this area. Great level of support around this area. But I just don't feel like it's important at the moment. Remember, price is all the way up here. So what I will do is delete this. I would actually delete this as well because we don't actually need it anymore because price is all the way up here. You want to have at least 3 key levels, and I got my 3 key levels here now. And I'm not going to have a zone around them because they're key levels. And when we do get to that level, then I'll draw a zone around it. So as you can see right now, price is around this area. So now what I want to do is we've drawn our key levels. Now I want to go to our 1 hour or 2 hours. Now I usually draw key levels at 2 hours or 4 hours. As you can see, it is a bit more respected over here. Now what I want to do is I want to go into the 1 hour time frame, and I want to start marking up areas that could be potential area of interest and area where price could potentially give us some sort of move. And this is now, this guys right here is now where we go in depth for more daily analysis, and every day it will change. So this right here for the whole week is not going to change. I don't need to change anything for the whole week now. I'm set, I'm ready. But now from this part of the video onwards, whatever I do on a regular basis, I have to keep updating it because the area of interest will get swept. The area of interest will, a lot of people will get traded into. And so throughout the days, throughout the week of the days, you will see and notice that those areas are getting filled and traders are placing trades within the areas. So now I want to really look into and see where is potential area of interest. Well, we are buyers, so we want to look for a good level of support. So for me, we can see that price already, we've had the break of structure, and we're looking at price coming back down, and potentially going to the next level of structure, which will be this area right here. We'll just draw it out like this, boom, like that. Is it a good zone? Yeah, as long as we get some more than 3 reactions. So we've got 1 reaction here, 2 reactions here, 3, 4, 5, 6 reactions within this area. So very, very strong magnet. Very, very strong magnet this is. Cool. So that's my target, right? If I saw any level of supports in between, I would have done it. But as you can see, all this is just a build-up of liquidity. Like all of this area is just a build-up of liquidity, and I'll probably just put it in a zone like this. All of this is a build-up of liquidity. So for me, it's like if one area gets swept, most likely we'll just get another area swept and another area swept. Okay, but I believe that price, you can see that price went from here all the way down here pretty quick. Price went from down here almost up there pretty quick, and over here up here pretty quick, down pretty quick. So it wouldn't really just stop in between, even though like over here we kind of did swap in between, but we had the EMA here for us. And EMAs are really good indications as well to let us know if there's some sort of support or moving resistance. So now I kind of got a rapport and I've got a story. And now all I have to do is just wait. We're on the 1 hour time frame. We know this is significant levels. We know that price is now going to potentially come down because we had that simple break and retest, right? And it's as simple as that, guys. Now what I'll do is I'll probably go on the 50-minute time frame and look for like a certain movement. So for example, we might have like a double bottom, right? Price could easily come down, create a double bottom, and then continue to go to the upside. That's what we're looking for. We could see an evening star, a morning star, whatever it is, we could see that pattern. And now we can enter. So 50-minute time frame is waiting for price to come to my area of interest, which is here, this area of interest. And then once price gets to this area of interest, the reason why this is area of interest is because on the 1 hour time frame, we can clearly see that we're on an uptrend, right? And every time we're on an uptrend, right? Up, down, up, down, up, down, up, potentially could come to this level here. If it wants to go lower, we'll find some more levels of support. But at the moment, I think that we'll probably just come to this area and then continue to go to the upside. And that's how, guys, we measure our trades. That's literally how we figure out and build some sort of analysis. So now for the week, I'm good. You know, until this area is swept or has done something, we're good. Now I'm going to just show you more examples with this kind of trade, with this kind of analysis, and how it can help you. So today's Monday. I've done my analysis for some trades, and you'll see that, for example, here, GJ, this is one of my hot lists. And guys, what you can do is, if you are, just a key tip, if you are trading with numerous amount of markets, for example, GJ, gold, Euro USD, GU, I would say every single day only focus on one. Don't focus on too many. Like for example, for me today, I'm focusing on GJ. That's all I'm focusing on. If EU decides to give me a move, that's fine. If XAU decides to give me a move, that's fine. I'm only going to trade one pair. This helps you a lot when it comes to the markets because now you're focusing on one thing. So for example, if I look at a pair and it doesn't look nice, I'm not going to trade it. So for GJ, I mentioned to my Discord server, I said, look guys, we looked at the 4-hour, we see that we are bullish. I said that if price respected this area quite well and we're pretty much bullish and we had a reversal head and shoulder pattern, we're pretty much going up to the next level, which was 197,500. So that's a level for us to be interested in, and I can actually just draw like a zone around this area, right? And so then I was like, okay, we need to look for an area of interest where we could see potential buyers. So price was like over here in the morning. We saw that price is just keeps pushing up. So I said, look, I'm going to go with the momentum of the trade. I'm going to see the price go up, which has done it already. And now what I'm going to do is I'm going to wait for price to give me that pullback. Once it's given me that pullback, that's where we're going to enter and continue riding along with this trade. And guys, this is literally a perfect example of how we trade. Because now I've got my day set up. This could happen tomorrow. This could happen today, tomorrow, whatever it is, right? Even Euro USD. I told my Discord members I'm looking for sells on Euro USD only if we see a break or structure within this level. As you can see, we didn't see a break or structure within this level, so therefore this setup is cleared. I don't have to hit a trade. I don't have to lose. I don't have to win. And so this is how you have a structure, because I knew that we have a lot of bullish traders here, and the only way I am going to trade this pair is if it breaks the structure. It didn't do that, so now I'm just have to wait. I have to wait until the structure is broken, or now I can draw another structure, which is here, another structural point, right? And you can see that currently right now we're just in a consolidation area, right? I don't know if I have a consolidation box. Boom, a consolidation area. So now I know that I'm in consolidation. I'm not going to look at Euro USD for this week because it looks like it's just consolidating. And until I see price break one of these areas, I'm going to be fine. So now it prevents you from placing trades. Gold. I did some analysis on gold and I said to myself, I want to see some sort of reaction at this area. We clearly did. Price broke structure, retested within this area, and we came down. Clearly got that move. I missed out on this move. However, we always want to make sure we can call out moves. Even if we missed out, like for today, I'm focusing on GJ. If I was focusing on gold, we could have got some nice profits with this trade. But it's fine. It's completely fine. As long as you have the right bias, you are good. Okay, literally, as long as you have the right bias, you are good. And so I don't know if I had GU. Yeah, cool. GU. This is a perfect example of setting yourself up for the week. Okay. I have GU, I'm bearish, okay? Why? Because we had the breaker structure and we can clearly see price is retesting an area. Now, it could be retesting this EMA right here, and hence why I think we have a level right here, 1.27. Could be retesting the area, but I've got fib levels here to get myself ready for that reaction. What I'm doing, I'm waiting for price to come back to this area right here. This is where I'll be interested in. Price doesn't come back, it is what it is. But if price does get to that level, I'm ready to execute. So now I don't have to physically keep analyzing this chart or keep looking at this chart to find an entry. I have already got my area of interest. I already know what potential move I'm getting, and I'm just going to wait for this trade to play out. And guys, it's literally the more you do this, and if you designate a weekend or the Monday to do this, you are setting yourself up the whole week to be on the right side of the market. Don't just hop on the trade or don't hop on the market and then within 5 minutes you're already in a trade. You are rushing the process and you're not understanding what's actually going on within the market. You know I tell you guys all the time, oh, if you see a double bottom, you know, just enter on the neckline. But the thing is that what if the market just continues to go down and there was no neckline and you see price slowly coming towards a neckline, you're buying. However, you didn't look at the data beforehand, which was showing that price is going on a downtrend. You didn't see this additional area or this additional data that the market gave you. So when you see this double bottom, you're thinking, oh, we're buying, whereas the market is selling. And so you want to always be on the right side of the market, not the wrong side. And the way to do that is designating an hour or two and analyzing the market that you have and analyzing it for the week. It's so much more easier to look at the weekly time frame and tell yourself, especially if you've noticed candlesticks as much as I have, it's so easy to say, okay, look, this candlestick, we had a big, huge bearish candlestick. Why on earth would this candlestick be bullish by the end of the week? I think it's going to be bearish by the end of this week. And because I know that, I'm only going to be looking for sales. But I want to look for sales when I have the right confluence and the right area of interest. And so that's where we build that rapport. Same with GJ. I know that we're most likely, we had bullish, 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 morning star, right? I know we are going up. I already know that. I just need to now build a rapport and see an entry for myself. And that's literally how simple the markets is. You need to build that rapport, and your story is unique. Everyone's charts are going to look different. My charts will be looking different to yours. You might see different area of interest to me. As long as you're in the right bias, we both can still win. And that's the uniqueness of the markets. We both can still win, guys. Even if have a completely different analysis to you. You are analyzing your charts, you analyze your pair, your market, and you find a rapport for yourself. And you're going to notice that you will get better and better at this. The more weeks you practice, the better and better you'll become. And you'll get to a level like me where I can just hop on the charts on a blank canvas. Let's just say like USD CHF, and start building a rapport for myself, and then be comfortable with the trade and be comfortable within the markets. You don't want to ever make yourself feel uncomfortable or feel like you're unknown within the markets. You want to always know every single thing that's happening within the markets. It will get to a point where, without even looking at the markets, you know what's going on. Like literally, guys, it will get to a point where you literally will just know. Like, okay, with gold, I know that gold is probably around the 26,500 area, right? Or 26,500. Okay, cool. 2650. Sorry, not 26,500, 2650. And I was like, boom, I already know that, right? I didn't have to look at it. I didn't have to, build this, I didn't have to write it down, because the more you practice, the more you know. Now, I know that gold is going to be at this level, but if gold gets to 2750, I know that, okay, cool, ringing bells, that's a key level for me. I think that that's going to be a good area for price to sell or buy. Okay, last time we were there, people sold, most likely we'll sell again. And so the more you practice, the better it will come. And guys, you have to practice this. Now, it's not going to be a thing where you practice it every day, because this is weekly analysis. This is how you analyze the markets for the week, setting yourself up for the week. So it's not a thing where you're going to get this known by tonight. You're going to do this every single week. You're going to build a storyline every single week. It doesn't matter if you're not trading for the week, unless you're taking a holiday or a break, that's completely fine. But if you're trading, but you just don't see a setup for the week, still build a rapport, still build a reasoning, still build, like, for example, Euro USD. The reason why I'm not going to trade is because on a lower time frame, we're just in this kind of consolidation. And so for me, it's like, this is enough information for me to just wait and be patient. So this consolidation can happen for the whole week. And then next week I might look and see, okay, cool, price looks like it's broken structure, it's retesting. I may be able to enter. And it's as simple as that, guys, okay? So for the homework for today is, I want you guys to start back testing on a weekly time frame, drawing out an area, like literally draw out an area. So for example, let's say this candlestick right here. I'm going to draw out an area from this candlestick. Boom, boom, boom. Right, let's keep it blue. That candlestick right here. I'm going to go on the 4 hour. And I'm going to start building a rapport of what happened during this area. Why did price just randomly reject at that area? What was going on? What actually happened? Was there any news during this time? What's going on with this trade? Why did it do this? Why did it retest my EMA? And so forth. And backtest this and see and start building the confidence to analyze the markets. Okay, guys? So that's your homework for today. If you guys are unsure with backtesting, I am going to do a video. The video is going to come very, very soon, where we backtest charts. And I'm going to show you exactly how I backtest without paying for TradingView. You don't have to pay for TradingView if you can't pay for TradingView, and you can backtest without the replay bar. It's very easy the way I do it. The method is very, very good. So make sure you stay tuned for that. And that's pretty much it for today's bootcamp. Guys, make sure you like and subscribe if you enjoy this boot camp. If you want to be part of the community, again, just click the link in the description below and be part of the community. If you guys are watching this and you are learning and you are actually understanding, make sure you subscribe and make sure you share this to all your friends, guys. Like, literally share this to every single person you know that wants to be a trader, or if they've been trading and struggling. Like, we're trying to help and change traders' lives. So please share this as much as possible. If it means you create multiple accounts and subscribe and help the community, help the channel, please do that. But other than that, guys, we're pretty much done for today, and I will see you guys tomorrow. See you later, guys.